On Business Incorporated today. Data from Nigeria Customs Service shows non-oil exports up by 56 billion naira in the first quarter of 2022. Government assures that Kenya fuel crisis will end in 72 hours. And we follow up with the price of copper in the midst of the war and higher demand. Welcome to Thursday's episode of Business Incorporated here on Channels Television. I'm Ini John Mekwa, where we'll start as usual in the markets in Africa, where sentiments were mostly positive at intraday. Nigeria and South Africa exchanges traded up. Nigeria's NGX was up 0.35%. It's been a positive week for Nigeria. And also in South Africa, JSE added 0.72%. Egypt's benchmark performance was down. That's the only loser we have on the continent, almost 2%. Meanwhile, Nairobi Stock Exchange closed Wednesday's session positive. Over in the Middle East, sentiments were mostly mixed at intraday. Abu Dhabi index traded down 1.26%, while Dubai index managed to stay up, very marginal, 0.08%. Elsewhere in the region, Saudi Arabia and Qatar indexes traded in different territories. Saudi Arabia was up 0.49% and Qatar index was down 0.47%. We move to the EU now, to Europe now, where EU approves an additional 500 million euros in military help for Ukraine, and that will include the purchase of weapons. But Kyiv is eager for even more. We had the president asking for more. So the pressure is growing on Germany in particular. We have Stephen Bursley now joining us from Berlin to give us updates. Hello, Stephen. Good afternoon. Well, how helpful for Ukraine is this additional 500 million euros?
Well, it's definitely not unwelcome. This 500 million euros raises the total EU military aid for Ukraine to 1.5 billion euros, and that's money for things like military equipment, it's for medicines, and it's also for weapons, and it comes out of a specific EU fund that was created to help Ukraine on security issues. However, it's worth really emphasizing here that what Ukraine wants right now more than anything else is heavy weapons, and that means things such as armor. We're talking about tanks, we're talking about armored personnel carriers, and also helicopters. And those are items that it can't just buy off the shelf. It needs to work with partner militaries to get the approval and the purchase rights for those kinds of equipment.
And how is the EU responding to the request for heavy weapons?
Well, first, let's look to the U.S., which just yesterday approved $800 million worth of heavy weapons for Ukraine that will likely include helicopters, and it could include some armored vehicles as well. So there's precedent right there that's being set. That's going to put more pressure on the EU, and a lot of that is going to fall on Germany. Now, keep in mind that it's only been a matter of weeks since Germany reversed its overall position on delivering weapons to military areas, to countries that are involved in conflict. And in that case, it approved anti-tank weapons, anti-air weapons. This, for heavier weapons, is causing a bit of disagreement, it would appear, in the governing coalition here. Although it seems in the last few days that really it's the Chancellor, Olaf Scholz, who may disagree with this or has not yet sent any clear signal about what he wants to do. So the pressure is rising. What's interesting is that in the past few days, we've also seen new pressure. The German company, armaments company Rheinmetall, has said that it was willing to deliver as many as 50 Leopard tanks. These are the tanks that the German military uses to Ukraine, as well as provide a short training. But it just needs a signal from Berlin here.
And what sentiment is all this driving in the markets in Europe?
European markets, when we're looking at Berlin and Paris, both starting with light pluses so far today, London slightly down. Really, all eyes are going to be on the European Central Bank. They're meeting later today, and everyone is looking for more signals about what the plan is for the future. There is an expectation that the ECB will follow the path of central banks in the UK, in the US, and eventually raise its interest rates, its benchmark rates later this year. At the same time, the ECB is walking a very fine line because of the war and because of inflation. It's facing higher prices in EU member states, but it's also facing weak growth. And so getting that timing just right for bringing interest rates back up is going to be very difficult for the ECB, especially in comparison to other central banks. But that is what investors are definitely going to be watching today.
All right, Stephen, thank you so much for that update. So we'll move now to London, where not just in London, but it seems the buzzword, or should we say name at this time, seems to be Elon Musk. We have Juliana joining us from our studio in London to tell us how investors are reacting to this. Hello, Juliana. Good afternoon. Well, this offer to buy Twitter, what buzz or what reaction are we getting from London?
A very small reaction in London, apart from the fact that people are pretty shocked and are enjoying this unraveling of Elon Musk's battle with Twitter. Of course, he is the world's richest man. His company is the world's most valuable company, so he does have a lot of money on his hands. I got the letter that he wrote to the Twitter chairman saying, "I invested in Twitter as I believe its potential to be the platform for free speech around the globe, and I believe free speech is a societal imperative for a functioning democracy. However, since making my investment, I now realize the company will neither thrive or serve this societal imperative in its current form. Twitter needs to be transformed as a private company," adding, "My offer of, I believe, $41 billion is the best and final offer. And if it's not accepted, I will need to reconsider my position as a shareholder." Now, it's not even been 2 weeks since he became the majority shareholder with about 9%. Earlier in this week, there was a little bit of shock as he decided that he wouldn't join the board. And now, of course, people are putting the puzzle pieces together and realizing that he couldn't do that because then if he did join the board, he wouldn't be able to make this offer. And now, interestingly, $41 billion is above the market capitalization. I believe the markets in New York are just about opening now. But at the close yesterday, Twitter was worth about $37 billion. So $41 billion is a lot of money, but are people going to be happy about it? Twitter at the moment haven't made up their mind. And when I say Twitter, I mean Twitter users. We know Elon Musk has been speaking to them rapidly over the past couple of days. There have been lots of criticism about one of the most popular social networking platforms in the world. But also he has had a lot of suggestions. We know that a lot of people do want that blue tick, that verified status to say, yes, I've arrived. He wants to offer that out to more people. Also as well, Elon Musk was very, very critical about former US President Donald Trump being removed from the platform. So there are lots of changes to be made. Is he the right man to take it forward? This is potentially going to be the biggest business story of the year if it does go through, but we shall have to wait and see. Twitter have said that they've acknowledged his letter, and they did describe it as an unsolicited and non-binding proposal. So we'll just have to wait for the states to fully wake up to get some, proper reacts.
Exactly. I mean, I know this is going to go a long way and it's going to stay on the media for quite a while, well, depending on the response to it. But how's the market at this time?
The market's not bad. Final day of trading. The FTSE All-Share at intraday is up 0.03%. FTSE 100 also up by that same amount. And the FTSE 250, the domestic market, also up too at 0.15%. In the currencies market, the British pound is rallying against the US dollar. This is the second consecutive day at the hint of interest rates rising. And that's up by 0.11%. Also, the British pound is trading up against the euro by 0.01% and up against the Japanese yen too by 0.04%.
All right, Juliana, thank you so much for that update. We move now to Asia, where shares were mixed today, with mainland Chinese stocks among the biggest gainers regionally amid hopes of policy support from authorities. Singapore and South Korea also announced monetary policy tightening. By Thursday's market close in mainland China, the Shanghai Composite was up 1.22% to 3,225.64. The Shenzhen Component climbed 1.266% to around 11,714.62. In Hong Kong, the Hang Seng Index also gained 0.67% on the day to 21,518.08. In other markets, the Nikkei 225 in Japan climbed 1.22% to close at 27,172, while the Topix Index advanced almost 1%. In Australia, the S&P AX 200 rose 0.59% to end the trading day at 7,523.40. Australia's unemployment rate remained at 4% in March, and that's according to the authorities. Moving on to the United States now, we see that stock futures were muted in early trading as investors awaited quarterly earnings results from some of the biggest U.S. banks. Dow Jones Industrial Average futures rose 26 cents. S&P 500 futures was flat. On Nasdaq 100 futures added 0.1%. That's very marginal. Well, Twitter seems to be in the news now. Its shares popped up in pre-market trading after Elon Musk offered to buy the social media company. And Musk has said that this was the best and final offer, as we heard Juliana telling us there. We'll go to the oil space now. Prices fell today after rising sharply in the first half of the week as traders weighed a larger than expected build in U.S. oil stocks against tightening global supply. Brent crudes were down 45 cents to $108.33 a barrel, while U.S. West Texas Intermediate futures was off 69 cents to end at $103.56 a barrel. Both contracts had strung off a large build in U.S. crude inventories to end the trading session roughly 4% higher. However, the oil complex is heavily focused on the short term, and fears of supply shortages, they're crowding out. And the International Energy Agency has warned that from May onwards, roughly 3 million barrels per day of Russian oil could be shut in because of the sanctions or voluntary embargoes. Well, we come to Nigeria now, where we see a total of 56 billion naira has been recorded as value of exports by the Nigeria Customs Service, Tinkan Island Command. And that's an improvement of 62.67% for the first quarter of 2022. According to the report by the Nigeria Customs Service, cashew nuts and other exports rose compared to previous quarter. Meanwhile, the president of African Cashew Alliance Export, Mr. Tola Fashiru, attributes this growth to improvements in port operations in Tinkan, but however says that there's more to be done in improving operations in Apapa ports.
Central Bank also introduced a new system, trying to digitalize it, but you still discover that it's still cumbersome. So we hope that the system will get better, and things will be faster. I will tell you that things are much slower than what it used to be 5 years, 6 years ago. Things are, much, much worse now than what it used to be. In those days, you could load your container in your warehouse in anywhere in Lagos, and the containers will get to port same day. This is not the case right now. And then the processes also have become more cumbersome that exporters are not finding it easy. We are still looking up to government to, get it, more smarter and quicker as we have in other countries.
Well, looking at the metals market now, gold traded flat, but prices were set for a second consecutive weekly gain as Ukraine crisis and broadening inflationary pressures lifted the safe haven metals appeal. Spot gold was a little change at $1,974.28 per ounce, and gold futures were down 0.4% at $1,977.60 per ounce. The metal has gained about 1.4% so far in the week, Most markets will be closed tomorrow for the Easter holiday. Spot silver was flat at $25.73 per ounce. Platinum was unchanged at $986.27, and palladium rose 2.3% to $2,368.85 per ounce. We'll take a break now. When we come back from that, we'll head straight to the African continent. More stories from there for you. This is Business Incorporated on Channels Television. Well, it's time to see what's going on in our commodities space. And today we are looking at copper. That's one of the most resilient of metals used for multiple purposes. Most cables for wiring and transmission are made of copper. The price of copper at the London Metal Exchange increased by 7% to $10,336.05 per ton. And that was in the first quarter that just ended, while some analysts say that prices could ease in the near term. Others see copper prices reaching $12,000 per ton in the fourth quarter of this year. Well, we have to help us understand this perspective and put them in one piece. Favor Oguniran. I beg your pardon. Favor Ogunrinoye. She's an analyst with Financial Derivatives Company, joining us now. Hello, Favor. Sorry about that. Good afternoon.
Good afternoon. Thank you for having me.
Good to have you, Favor. So we see a lot of commodities are being affected, you know, by the war, by COVID and supply chain disruption. What's the sentiment surrounding global copper at this time and in the midst of all that's happening?
Well, for copper, we've seen that the global copper market is actually currently facing a supply shock coupled with low inventory as well. So we've seen that the total copper inventory across the London Metal Exchange, Shanghai Futures Exchange, I think is about 111,500 tons compared to 164,000 in 2021 and also about 206,000 in 2020. So you agree with me that the inventory has been steadily declining, and then now inventories are pretty low, and that can majorly be attributed to low production of the commodity. So looking at the top producing copper countries in the world, in Chile, we've seen that they are currently facing low copper output due to poor ore quality and also drought conditions. And then in Peru, they're actually facing an ongoing protest, which is limiting copper production in the country. And also for China, we've seen that the renewed COVID lockdowns also limiting production there as well. And we can't leave out Russia because Russia is also the 8th largest producer of copper in the world. I'm seeing that this lingering conflict is also kind of further tightening the supply of copper. So in the short term, we see that the supply of copper remains tight, also coupled with the demand of copper in the world's largest importing country, which is China. We've seen that the demand there remains sluggish as well. So we expect that prices will maintain sort of a moderate growth in the short term.
You talked about Peru, which is the world's second largest copper producer. And of course, we can't put away Russia. There seems to be in every space that we have commodities. Well, Peru has warned that it will target surplus profits that mining companies have earned from rising metal prices. This move comes in the form of high tax. What are the implications? How do we see this spilling over into the commodities, into the copper's markets?
Well, I would say that there are mixed implications. So like I mentioned earlier, there's an ongoing protest, and we've seen that a lot of mining companies have actually suspended operations, and because they don't have access to the supplies, and we've seen that has affected about 20% of copper production in the country. And the reason for this protest is actually an alleged insensitivity of the mining companies regarding the environmental effect of their activities in the hosting communities which they operate. And this tax adjustment is meant to come in form of, a form of a way to ease the social unrest, so there is this plan to distribute the wealth from these mining companies to the host communities, and that can maybe positively influence the relationship between them. But at the expense of that, we are seeing that would, cause profits to decline and also affect the return on investment. So if this continued social unrest should continue, that would definitely impact the global copper market. But if we see these tax adjustments come into play and have positive implications, then that means the production there should increase. But I think an interesting question regarding this situation would also be how sustainable this approach is, considering that there are still environmental implications, and also what happens when there's a decline in metal prices. So I expect that all these factors will kind of play a role in the long term as well.
All right, and then when we take it back home here in Nigeria, we see that Nigeria has about 10 million tons of copper ore deposits, obviously not developed. However, the metal ore sectors contribute about very minimal, 0.01%. What then do you think is responsible for the seemingly lack of attention to extraction and production of this commodity that we have in the country?
So copper mining in Nigeria is actually at a small scale presently. According to the data from the Ministry of Mines and Steel Development, we've seen that out of the 15 registered entities, about 6 of them, which is 40%, are small scale operators. One has an exploration license, and I think about 8, they also have a mining license. A further analysis also shows that about 13 of them are located in the northern region. So what all of this means is there's a problem regarding licensing, because we have majority of small scale operators, and also since that this mining sector is actually exposed to insecurity risk. And there's also an issue of trading, because the further data also shows that the one entity which operates in that regard actually has its license expired. So there's inadequate trading of the commodity. So I guess these are the reasons why Nigeria's copper industry cannot compete on a global scale.
Oh, thank you so much, Favor Ogudinroye, analyst, financial derivatives company. We do hope that Nigeria can get over these hurdles and will get more contribution from that sector into the GDP. Enjoy the rest of your day.
Thank you for having me.
Then we move to Kenya. Well, an update on the fuel crisis there after months of fuel crisis. Energy and Petroleum Cabinet Secretary Monica Juma has assured that the ongoing fuel crisis will end within 72 hours. And then she urges for calm among motorists across the country. Energy and Petroleum and Regulatory Authority has already issued a show cause letters to marketers selling fuel above prices stipulated in the monthly reviews. Ms. Juma affirms that the country has sufficient fuel stocks and reiterates that there's no need for panic, as she assures that in the next 72 hours, everything will return to normal supply and demand cycle. She also blames a group of oil marketing companies for hoarding fuel stocks and sometimes even diverting them to regional countries, and this has further worsened the crisis. Well, staying in Kenya, investors from Kenya plan to invest about $1.6 billion in the Democratic Republic of Congo, and Rwanda's biggest bank will open an office there after the country becomes the newest member of East African Community. And this is intended to boost the economy of both countries and also create jobs for its citizens. That's it on the program today. Thank you so much for being a part of it. I'm Ini John Mekwa. Let's do the final one tomorrow.